We start these days with FirstRand, which is interesting because this is now by far South Africa's largest banking, insurance and investment group. It has the biggest market cap. That's why we talk about them first. And this is a recent development. The bank has done exceptionally well. The three big divisions: First National Bank, FNB; WesBank, the vehicle finance and asset finance company; and then a bunch of other bits and pieces like Ashburton and all that sort of thing. So, I mean, it's got chunkiness, that's the truth, and it does particularly well. You add that lot that I mentioned earlier to the RMB Investment Bank, you're talking about a group with 325 billion rands worth of market cap. Price to earnings ratio 16.1, that's the highest of the group. Dividend yield 3.3. Your overall views on this Titan?
I think, I mean, you say it's most expensive. I mean, PE-wise, I mean, we've still got Capitec, which is trading,
Okay.
trading almost like
Good
a
point.
retail PEs. But yes, it is more expensive. I mean, Standard Bank is also fairly expensive PE-wise, but FirstRand, I mean, for what it does, I mean, if you look at, return on equity of what, 25%, I mean, cost to income at sort of, 50 or so. I mean, on all those metrics, it's better than its competitors. It is the bank which we think it's the quality business out of the lot. But for that, you do pay a premium.
It's got 100% of its operational subsidiaries. Part, in my view, of the reason it did well in the last decade is when they entered the decade, there was this complicated structure with RMB Holdings and then the underlying businesses. But they cleaned that up about 4 years ago with Remgro taking a key role in doing the reorganization. So you know now when you buy FirstRand what you're getting. We know that First National Bank is the leader in terms of capturing middle income clients. We know that RMB continues to do well. WesBank, I think, continues to do well. So it's operationally, as you say, that's where the ratios reflect just how well they run that place.
No, definitely. I think out of all the groups, I think probably the darkest horse is that WesBank. I mean, it's very difficult to tell where the earnings are going to be. I mean, obviously you've got a consumer under pressure. That sort of asset-based lending. It can be a tricky one, and I mean, earnings can be quite variable. But I think like you mentioned as well. You briefly mentioned Ashburton as well. I think that could be a very big kicker for the business. I mean, getting sort of the what do they call it, the wealth and investment side of the business up. I mean, they leverage RMB products. They've got Ashburton's 30-year track record.
They needed to rebuild that because the asset management businesses went to momentum as part of the reorg.
Yeah, so I think that can be quite interesting.
Let's have a look at the share price. Oh my goodness, look at that share price. I'm getting excited all over again. 15 Rand to above 50. Sure, and it just keeps going, and there's been a lot of water under the bridge during that period. But it's been a wonderful, we've owned this one in our portfolios a little bit, they've done well for us, but we haven't always held them long enough. One question, management revisions, the market likes those. So the new CEO of the overall group is going to be Johan Berger.
Yeah.
And then Pullinger, Alan, goes from RMB to deputy CEO, and then there's a new guy, I don't know, James Formby, who comes in at RMB. Jacques Chaliers is at FNB. So these guys, they're solid buggers, huh?
Yeah, they're very, very solid. I mean, definitely solid buggers. Looking at Johan Berger, I think a very good appointment. A lot of banking experience. So I think, very, very good for the company. And again, at these levels, these are institutions. They're South African institutions. These are almost political appointments. And I mean, the leadership, yes, is very important to the banks as well. But I mean, you can't forget that the banks have enormous, very skilled teams below them. So as long as they don't make too much of a mess, I think FirstRand, the systems in place, the technology that they've put in, the whole digital strategy that they followed, they're going to carry on doing well. All these CEOs have to do is not mess it up.
Okay, so this sounds like one of those cases where we're going to say the only basis in which to decide hot or not is whether or not they've run too hard, a little bit too expensive considering all of the above. I'm feeling like I'm going to go hot anyway. I would back these guys to continue with a good trajectory. What about you?
Definitely hot for me. We hold it in portfolios. I mean, we like to buy quality, even if it is at a slight premium. Rather own quality than try and buy a turnaround story. So we hold it in portfolios. Definitely a hot company.
Excellent. My thoughts exactly.